Hi, Faye. Hi, John. Can you hear me? I can't hear you. No, I can't hear you. I still can't hear. I still can't hear you. Let me double check headphone. Oh, I think you're muted. You're muted. Yeah, that's okay. That's good.
Is that okay now?
Yeah, it's better. Yeah, I can hear you now.
Okay.
That's great. Yeah.
Hello, John.
How you going?
I'm good, thank you. It's been 12 years.
It's been a couple of years.
Oh, that's not a couple. It's a 12.
That's the important thing.
Yeah, you've been changed couple companies.
No, still company. We changed business name. Just still company. Still same company.
Oh.
Still same place. Yeah.
Oh, that's good.
Yeah.
It's more organized.
Yeah, it's the first one I organized it about in 2008 with Suncorp.
Yeah, that's the one with Suncorp that will pay off the number 3.
Yeah.
With Suncorp and Suncorp. I don't know what happened to Suncorp, and then
it's a long time ago. Okay.
So that
now
is not very good. Yeah.
Yeah. Before we forget, can we just please show your IDs? Let's get an ID verification out of the way. That's just to show the driver's license and passport.
Right, and we're looking at the
cameras. Yeah.
Just show the camera. Yeah, that's good.
All good?
Yeah, all good. Yeah.
Nice.
That's yours. Yeah.
And the passport.
And the
you
passport.
Want to see the passport as well?
Yeah, just.
That's not yours, though. It doesn't even look like you.
Yeah, got it. Yeah. Good, John. Yes, good. Okay, good, Faye. Yeah. So, John, you're still working in the mint, in the Perth Mint.
That's right, making lots of good gold and silver.
The gold, silver, yeah. How long been there? 20 years?
No. I only started there a bit over 2 years ago.
2 years ago. I think
so basically, 2008, I was a field sales manager. What was I doing? No, 2008, I was a sales contractor. I was running a team. And then I got promoted to a trainer. Then I got promoted to field sales manager.
Yeah.
And then they decided they didn't need a field sales team. So I got a redundancy.
Redundancy.
Yeah. And about 6 months later, I got called by the old group. They moved to the company took over, it's a big bit of change. And then they employed me again as a sales role. And that was good for about 1.5 years until they realised I didn't need a sales team, and then I got another redundancy. And then I was getting 2 redundancies in 2 years, and at the time
which is good, right?
Good. First one was good. The second one wasn't as much because I was only been there for a couple of years.
Yeah, too short.
And then I thought, what am I going to do? And I thought I ended up doing security, so that's what I'm doing now.
Yeah, that's good.
I worked at Woodside for about 6 months or 8 months doing security.
The biggest petroleum.
Everyone knows Woodside.
Yeah.
And then I got through that company, got offered to moved to the Perth Mint, and then they took me in-house. So I was external for 6 months, and then they made me a government worker. So now I'm working for the government.
The full-time, permanent full-time.
Oh yeah,
that's good.
Yeah, I've been permanent full-time for about a year and a half there. Been there for 2, but about a year and a half permanent full-time.
Yeah, cool. Yeah, that's good. And yeah, okay. Let's go through this US constitutions. What I do, I prepare a spreadsheet based on information you email to me. Let me share the screen. So just the share screen. Which one? Okay. Let me share this one. Tell me if you can you can see
we can see it quite clearly. Yep.
Quite clear. That's good. That's good. Okay.
Yep.
Now, because that's the way we capture clients' information. That's a critical information for the loan application. Some information I'm not ready for. For example, your vehicles or super are not relevant. So that's information we capture for your situation. We call fact finding. Now, John, I did an analysis of your pay. Your base income is about 54 a year.
That's right. Yeah, that sounds about right.
Yeah, you have I can't remember 45 or 40 or 54 uncle allowance. Is it uncle or something? I can't remember. It's about 650 a year.
That could be anything, but like
it's more than.
I think I can't remember. Some allowance, some allowance.
Bonus, yeah, I get first aid allowance and
first aid. Sorry.
Yeah, so that's yeah.
Yeah, first aid.
Mainly it's the overtime because I'm working for the government. We get like I worked on Monday public holiday. That's 2.5 times. Weekends are double time.
Yeah.
So what is it? By the end of the year, my overtime will be nearly as much as my base pay.
Your base pay, yeah. So I work it out. Your overtime is about 40 grand.
Yeah.
So your total income is about 94 grand. Yeah. And the reason I separate your allowance and overtime from your base because bank only consider 80% of allowance and
I understand that. Yeah.
Separate them from your base, and your family structure: married couple with 2 kids. And what's the age of their 2 kids?
They're 9 and 11. Is that age matters?
No matter. Just have some information there. Not relevant to you because some family receive family payment from government. That kids age. Age is important. Yeah.
Oh, okay.
Yeah. So
not
relevant to you.
The rent.
The rent. Okay. Now I don't know whether it's correct or not.
Why is 3 Delwood Road coming up at 170 a week?
That's why.
Because there's 340 a week. The property is joint owned by both, by Faye and John.
Yeah.
Both.
This is
right?
yours. It's not mine. Yeah, that's yours. Yeah.
So which one is which? So number 3 is joint owned.
Yeah, that's correct.
On both name.
Yeah.
And number 10 is on John. The number 10 and the number 93 is all under John's name.
Yeah, that's correct. Yeah.
Okay, that's good. Okay. Now, because if taking a negative gearing working, because John has income, so it works better under John's name. Yeah.
That's right. That's where we got the last house under my name.
No. The last house we're thinking buying both.
No, the last name was number 10, Faye. That's the last house I bought. I put it under my name because I was earning an income.
Yeah, but the new house we're buying, we're thinking still join them.
Join them, yeah, that's fine. This spreadsheet is only for current situation.
Yeah. Okay.
And I did a quick search on these 3 properties. That's the estimated value I get. I don't know whether it is realistic or not, but just for time being, we just stick to this value.
Don't you compare to Sydney, right?
No, different market, totally different market. But your return is very high. Rental return is very high.
Yeah,
you know,
the return is good.
370 a week. Say that is for 420. There's no way in Sydney. Sydney, we're talking about at least 600,000 if you want to achieve 370 a week rental.
Oh, really?
Yeah.
So it's
we're one of the lowest rent. What do they call it? The percentage of income to rent. We're one of the. I think we're the lowest in Australia.
Yeah, and also your income is high. You know, on general, the general income wage level in Western Australia is high. Yeah, which is good.
Yeah.
Now, now move on to current mortgage, current loan. You have still have 2 loans with loans.com.au, right? Still have 2 loans with loans.com.au.
Yep.
Yeah, and
correct.
The first one is 554. It's for number 10, Darwood Road. Yeah.
Yep.
And number 2 means number 2 in here. 2 in here.
Yeah, 93. I was thinking if paying off, it's no benefit for us because if we're paying off the loan, then we can't withdraw all our offset. That's why I leave it there.
There's offset or redraw. Redraw. Yeah, that's something because the bank also consider redraw as a loan, because if you redraw, you have a say you have 190,000, is that right? In redraw and 100, I can't remember in your email. If you redraw the money from the loan, the bank still consider it is a loan. Yeah,
it's like a credit card system.
Yeah. But we can discuss later now.
Okay.
But at the moment we say, let's say with because especially if you want to keep a redraw, probably have to refinance as well. So attentively, I would say for this exercise, we'll refinance these 2 properties, number 10 and number 93. Number 93. That's so we take out loans.com.au.
Yeah.
And you have a credit card for $5,000 and no balance. You still have a saving of 40,000. Is that right?
Yeah, with the credit card actually, we have credit, $5,000 credit. So the credit card, our totally available money is like 10,000 to.
You can still use. So you put the money into a credit card as a
because why? Yeah, because the money, if you don't pay the credit card in advance, they charge you interest. So we always every month we always pay in advance. So
which card which lender?
Ours, because we're under Qantas frequent flyer point as well. They are associated with Qantas. So
you check this credit card again, because credit card usually give you up to 55 days interest free.
Yeah.
For your purchase.
But we always pay. We don't want to owe them money, so we always pay.
Yeah, that's good.
That's our habit, because we don't use the credit card as a credit card. We use it as a debit card.
Debit card. Yeah, that's fine. That's fine. That's no problem. Yeah. All right. So presumably I have a saving 40,000. Yeah.
If it's the withdraw, will be more than that.
Well, yeah, of course. Redraw is in the loans.com.au. This redraw. Yeah. All right, that's fine. Okay, that's your current situation. Yeah, that's the current situation.
Yeah.
Current situation. Now for this refinance or purchase exercise, what we want to do, first one, we want to refinance your loans.com.au loan. First loan is 354,000. Probably we'll apply for 355 because you need to cover the what's called
duty.
Yes, government charges, the discharge fee, and so on and so forth.
Right.
And I just forgot to mention, you will get $3,000 cash back.
Yeah,
The bank will pay you $3,000.
That's great. That's what I want to ask you, because St. George and Westpac, they both offer the cash back.
Yeah,
so
cash back. Yeah.
Yeah,
So you still get $3,000. Yeah.
Yeah, so to cover this cost.
So more than enough to cover the cost. Yeah.
Right.
Yeah. And just suppose it's a value for that. It's for both properties are for investment, and there's a total loan total balance, total loan you need. Now for the new purchase, they will move on to purchase here. Say you want to buy the property for 580,000.
Yeah.
And we apply for loan for 600,000 because you may want to cover the stamp duty as well. Let's see. Let's see. We borrow 604,000.
Yeah.
And the value is still 580, and the cost is stamp duty is 24,000 because we borrow 604.
Yeah.
You don't need to come up with any deposit. Yeah. So you borrow 100%.
Oh, we can borrow 100%. Oh, that's good.
Yeah, you can. And the expected rental is 600. I put 360.
More than that.
More than that.
Expected rental is with this amount is at least 500 with the area we're buying.
Okay, so the property is already rented.
买那个学区房，所以那个rent可以很高。
你那很高，它是通过 agent 租是高的，还是你自己管，还是？它
是 agent 已经在管了，已经有那个，他已经写在那个 property description， 我可以发给你们看。
OK，
他就直接在那个 sale description。
他那个房子现在已经出租了吗？那个房子
？Yeah, it's a rental.
Oh, that's good. That's good.
So you know exactly what's the money we're getting.
Yeah, because the bank usually put a cap on percentage of rental.
哦。
所以呢，如果是这个房子已经是出租的话呢 ，is likely 他们会 take 这个 rental， 不然的话他们会用他们的一个 estimate， 因为他们比较 conservative 啊。
Yeah, that's what we're aiming. We're aiming to buy the one already rent out. We've got the tenants there, so we can get the money in straight away.
Yeah, that's good. OK， 那这样子的话呢，我们一共用3个 property 作为 security.
Then we have 3.
Number 10, number 93, and the new property as a security. Then we borrow total borrowing about 959,000.
Yeah.
Now 604,000 is for the new property.
Yeah.
And 354,000 is for refinance.
Right.
Yeah. So basically that's the current. This is the overall structure. LVR, the loan to value ratio is 71%. Based on this valuation, if the value is correct, but still subject to valuation. Property.
Dennis, I've got a silly question to ask.
Yes.
I may have missed it. Number 93, we have $500 owing on it.
Yeah.
Yep. If we withdrew some money from the loan now and brought that loan up to say $10,000 or $20,000 left owing on the house, and we brought it across, would we qualify for the $3,000 rebate?
$3,000 is just one property, one loan. So you already qualify $3,000 anyway.
Okay, fair enough.
Yeah.
All good.
Yeah. And
any
benefit? No, there's no benefit. There's only I thought it was $3,000 a loan. So if you increase per application per customer. Yeah. Okay, that's fine. Yep. All good.
Good. And get back to the question you have, Faye. You want to keep the residual in 93.
Correct.
Let me go back to, because now the rental is $500 now.
Yeah.
And what we do, we just apply to the maximum. For example, at the moment, 93, we say we refinance $500, but
Yep.
it is possible if we can refinance to 120,000, for example.
So
Yeah,
Then
that's
we
what
do
I'm thinking.
120,000. We apply for the maximum.
Yeah, that would be great. Because
then we put the money back onto the house.
yeah, because
Yes.
the money we're going to put back to the loan in the future, so definitely it's going to be used for the loan. So
Yeah.
we want to borrow to the maximum. So
Yeah, we borrow
I
to
just
maximum to your borrowing
I just
capacity.
want your opinion that
Yeah.
so how much to take out from the withdrawal.
Yeah, just leave it to me. We'll try to borrow to maximum. But if you borrow maximum, there's another issue is maybe it depends on the value of these two properties. For example, if we change this to 150,000, we borrow. So that would.
This also change the new loan.
New loan and the value ratio can change. See why this one doesn't change. Why this doesn't change? Okay, I think it depends if we have to, because we want to change the LVR under 85%, right? 80%, sorry, 80%. You don't want to pay mortgage insurance. So if we need to, we may need to bring number 3 into other security as well. But let's wait and see. What I do, I will order valuation for these two properties first, number 10 and number 93. So we know exactly how much the bank values these two properties, and then we work backwards.
Nowadays is everything. Do you have to send someone to the property to have a look? So
no, it depends. It depends. Sorry, it is here. No, okay.
Yeah,
if you borrow 150,000 against 93, out of sudden LVR will increase to 82%.
Oh, so that's
which is not good, because then you have to pay mortgage insurance. The solution of that is we add number 3 into the picture as well. So if we add another 400,000, so this is number 3. Downward. So the LVR decrease, it dropped to under 80%.
Yeah, that's what we want.
Yeah. So, but let's see if let's get a valuation done first. What I'll do 2 things now. One, I will reassess your borrowing capacity with $500 per week for this rental. Yeah, and also the one thing, see how much you can borrow. See how much this figure will be. See that's a key figure. How much it is.
What if the rental changed to 550? Because I saw properties, actually it's 600, but I look at the properties, $500 to $600 a week.
Yeah,
rent.
but let's work on the best situation and let the bank to assess it.
Okay.
Yeah, that's fine. That's not a problem, because we have a room. It's not something we have to borrow, so this we still have a room to move, which is good. That's not a problem. Let's set to 550 or even $600,000 $600. And work backwards. That's fine, because you have another property you can use. Downwood.
Number 3, I can give you the valuation, because actually we got the valuation from the CBA, the Commonwealth Bank. Is that the figure you used, like the? No,
okay. Each bank will value your property. Can be different. What I do, let me leave it to me. I will assess your borrowing capacity, see how much you can borrow altogether. If it looks like we have to use number 3, and then I will include number 3 to the valuation list as well.
Yeah, I know number 3 is definitely 320 something, more than 320,000 of number 3.
320. Okay. Yeah.
Yeah.
Don't worry.
Yeah, change to 320 to see how much it changed on the LVR.
LVR 66%. It's still good.
Yeah, so
Still good.
yeah, I think we'll have to use number 3. Yeah.
Okay, let's leave this to me. Leave this to me.
Yeah.
Okay. Now let's talk into the any questions so far, John?
No, it's all good. All good.
You're sitting on the
Yeah, he's here.
in the back.
Can you see him?
I'm not that good looking. You don't really see me.
No, just still your handsome. Okay, now, so if you are all good, now let's talk about the loan. The lender, first of all, the lender I choose is ANZ.
Okay.
Because ANZ, so far I discussed with NAB, CBA, St. George, Westpac, ANZ, and also Citibank. Because the reason I talked to those banks, because their interest rates are competitive. Also, they have cashback as well. Now, all of them except ANZ will still consider where you live, they consider as a boarding. So which means they have to consider $650 boarding fee out of your income.
A month, right?
A month, yeah.
I think we should be fine.
But no, but that will impact your borrowing capacity.
Oh,
yeah.
Right.
So basically, your income is $650 less per month. Now,
yeah, but I can be a applicationist, so I can add my income of the rent, my rent income in this loan application too. So it cover the boarding fee.
There's no boarding fee though.
The bank will consider boarding fee.
They will consider it, but then when they realise that your parents live overseas, they can put us down as
No,
doesn't matter. No, doesn't matter. ANZ will consider it's a free accommodation. I said, as long as you provide a stat deck, they will consider it's a free accommodation.
We can do a stat deck because Faye's power of attorney over the father.
Okay.
She'd be able to write a letter.
Yeah.
Do a stat deck on behalf of the father.
Okay.
Also on the base.
Stat deck. Yeah. So your parents are overseas or in Australia? In Australia, in overseas.
Sorry? They want to come back, but the COVID.
COVID thing.
Yeah, the COVID couldn't. They supposed to be back the last year, but if it's at Sydney, it's easier. But at Perth, they don't have the direct flight, so they can't come back at this moment. But they can be back anytime, and they need to sign anything and just send it to them, and they'll sign it over there.
Yeah. Okay, it's fine. Okay. Now, I choose ANZ. There are 3 reasons. One is they will consider free accommodation. They will simply they can use 100% of your income to service the loan rather than taking out $650 a month away.
Yeah.
Secondly, they are the best investment lender because other banks, for example, Westpac and St. George, they will increase your living expense, nominal living expenses with your rental income. The more the rental income you have, they think you spend more. So the disposable income is less.
Yeah, that's
your rental income. It's not good. But ANZ doesn't do that. ANZ just with your family structure. You have 2 kids, 1 kid. So ANZ is better in investment lending. Secondly, the third one is their product. They have the investment loan, the variable rate loan we're talking about, it will be around 2.8, 2.9% variable rate.
That's quite high.
Yeah, but ANZ has a special product for 1 year fixed rate loan with offset.
Right.
So basically, 1 year fix, I think, is 2.59, and the 2 or 3 year fix is 2.49. But I think that's what I do for most of my customers.
Yeah.
They fix, for example, fix 1 year. Say if you're borrowing 1.1 million, you can fix for 200,000 1 year fix.
Yeah.
At 2.59% with offset account.
Yeah.
And fix the remaining 900,000 for 2 or 3 years at 2.49%.
2.49%. Yeah.
For 2 or 3 years, 2 year or 3 years. Yeah. So that's that way. So you can still make additional repayment. You can pay as much as you can through offset account with 1 year fix. And for the maturity loan, you locking at the lower rate for 2 or 3 years. After 2 or 3 years, and we review and see if we can change to get
that's
rate
good.
again.
That's
so
our plan.
you keep review your loans. You don't want to set a loan, set and forget for 30 years.
That's why we have you, Dennis.
Yeah. Okay. Thank you. That's my job. That's my job. All right. So that's what we do. Yeah. And have you used fixed rates before, Faye?
No, we always.
No, I think I've had fixed rates where it's a little bit higher than the variable, but at least you got some surety. Because I mean, the RBA is watching the hot property market. As you're well aware, Sydney has gone up a lot. It hasn't stopped. Perth been really stagnant. Now it's going up a little bit, but Sydney's gone up even more. And the RBA is watching that. And they're looking at maybe increasing interest rates. Not yet, but they're hinting that they may.
Yeah.
How's the situation in Sydney, Dennis?
The price is going up. I think everywhere, not just Sydney. Everywhere.
Sydney's more than Perth. Sydney's more than Perth. In the last 3 months, Sydney's gone up more than Perth.
Yeah, but maybe it still depends on location, suburbs. But this time, the property market going blow up is very unique. It's everywhere.
Yeah.
Before it's different states moving in different stages. There's some they're called a property clock. But this time it's everywhere. Every states, even Northern Territory moving, and Tasmania. It is crazy.
We just look at Sydney and Melbourne. If Sydney and Melbourne go up, I think we got opportunities.
It's crazy.
If Sydney and Melbourne is the pioneer.
It is crazy. Now, John, get back to your question. Variable rate and fixed rate. Strangely enough, at the moment, variable rate is higher than fixed rate.
Doesn't make sense. Why would they be doing that?
Why it doesn't make sense? Yes, I'll tell you why. Because of the COVID, the Reserve Bank put how much, 9 billion or 90 billion? It's a large amount of money as a 3-year bond. They give the bank 0.1%. The bank just need to pay 0.1%. But this facility, only for 3 years. So the bank used this money to make a fixed rate loan for up to 1 year, 2 years, 3 years, because their cost is on 0.1%.
So basically, you're saying just put it as a fixed rate because that's the only way. That's the better way of going.
Yes, and the variable rate is higher. Now, what you said is correct. The RBA, sooner or later, they are going to increase the rate. They have to increase it. But when they increase, they will increase the variable rate. If you are in the fixed rate, fix and fix. Fix and fix. So that's why at the moment, unless you have a plan to sell the property in near future.
No, we're not looking at selling it.
Yeah, so it's better to just fix it.
Yeah.
To fix it. And but what I do, I have a fixed rate, what's called slides. Give me a second. Then
I can see the slide.
This is slide fixed rate loan explained.
All good.
You can see it?
Yep.
Okay. Now I want to discuss that because you haven't used fixed rate before, so I have to make sure you understand that.
When I looked at it many years ago, it wasn't 3, it was 5. I understand that the RBA's got a 3-year loan with the banks, hence only doing 3. But can we go for longer on this option of 5 years fixed rate?
No, 5-year rates are not cheap because this facility, the RBF facility only go to up to 3 years.
Okay, that's fine.
4-year, 5-year are high because of the market rates.
Yep.
Yeah. And now the fixed rate, the basically fixed rate, the interest rate is fixed for the period of time you choose, 1 year, 3 year, 4 year, 5 year, whatever you choose. Yeah. The movement of so when the loan is fixed, no matter how the variable rate move, it's not relevant to you because your interest rate is fixed. Also, the repayment is also fixed because the rate is fixed and repayment principal plus interest rate. By the way, the loan you get will be principal plus interest repayment, right? You don't take interest only, right?
Yep.
Your principal plus interest, yeah. Principal plus interest repayment is also fixed, right? Now, when the fixed rate loan expires, no matter 1 year, 2 year, 3 year, so if you have a 1 year fixed rate loan start from today, next year this time, this loan will expire. And when at a time, then you have option to change the loan to a variable rate, or you can fix this rate again.
I think it's 2 years more reasonable.
You can fix 1 year, 2 years, 3 years. That's up to you. Yeah, that's what happened after the fixed rate loan expires.
And too long, don't have the price.
And also, if it's possible, you can if you want, you can say for 1 million loan, you can fix for 500,000, the variable 500,000. You can mix variable and fixed together. It's also possible. Yeah, so that's a fixed rate loan. Now, but the fixed rate loan, now the benefit, can you see the slide?
Yep.
Benefit of fixed rate. The benefits of fixed rate. First, the certainty, you can set and forget for the period of time. Yeah, the interest rate is fixed. You don't have to worry about that. And also, it's a way to control the risk against future interest rate increases, because that basically is linked to the certainty. The third one, and you lock in the counter rate. At the moment, the counter rate is very low. So at the moment, it's good time to fix it. Yeah, the locking. However, there's always a disadvantage of everything. There's nothing all good. There's also pros and cons. First one, less flexible. For variable rate, you can make additional repayment with no restriction. You can make as much as you want. But for fixed rate, you can't. Most bank will limit, you can make about 10 grand. So it's a limitation.
That's not a problem. Basically, we can use any money that we're going to put extra on it during this time on other investments like the shares, and then any profit we make just paid at the end of the fixed rate term. Yeah,
you can do that, and also you can't withdraw if you can still put some money into fixed rate with limitation, but you can't withdraw.
But just now you say the NZ one can have the withdraw.
Yeah, I'm talking about the fixed rate loan itself. Yeah, fixed rate loan itself is a limitation. Yeah, even for NZ. Okay, just bear with me a little bit. And second disadvantage is that you may miss out when the opportunity, if the interest rate does going down, does drop, right? So you may miss out. Yeah, but
it's not going to go much. It's not like we're talking about a 7% interest rate potentially going down.
Exactly.
2.7%. It's not going to go to. I don't think it's going to go to negative interest rate. So
true. Yeah. But that's general information. Yeah. And also, if you want to pay out the loan, if you want to sell property or refinance while the loan is still under fixed term, the bank may charge you a breaking cost.
Like
Yeah.
penalty.
as a penalty.
Yep.
Yes, yeah, the brain can be expensive. That's why I asked you whether you want to sell property or not. So that's
No.
that's the one. The last one,
Yes.
yeah, the last one is the interest rate we apply now. For example, we apply the interest rate, say 2.59, 2.49, but depends on, say, but if you settle this loan in 2 months' time, between now and when you settle, the bank may change the fixed rate. Right? It can be low,
Yeah,
can be
that's
high.
right, yeah. Yep.
But so there's no guarantee you will settle at the same rate you applied for. So that's another risk.
That's why after the term finish, we have to review and refinance again.
Yeah, but however, there's a facility called rate locking. You can, it's like an insurance. You can, but you need to pay for it. If you pay for it, the bank guarantees you the interest rate you settle will not be higher than the rate you apply for. But at this stage, if you ask me, I think it's not necessary because the rate is not going to increase. Yeah.
Exactly.
But this slide is just for the general information for the fixed rate. I have to discuss with you. You want to understand the pros and cons.
You mean this is just general and the specific bank will have exemption, like the one, so you say that the one that put me off is the first one, that restriction on the repayment.
Okay, now okay, that's the next one. Fixed rate loan with 100% offset account. So that's a special one. Some bank, ANZ and Adelaide, there's only 2 banks, offer 100% offset account to some of their fixed rate loans. For ANZ, they only offer to 1 year fix, 1 year fix. And they can have a 1 year, 2 year, 3 year, 4, up to 5 years. But only 1 year fixed rate loan, they offer 100% offset account.
So means that we can put extra money in.
I understand what that means.
So have you used offset account before? I think loans.com there has offset account, right?
Yeah, I think the one we use now is our offset, so we can always make extra payments.
So offset account is a bank account. It's a bank account. It's a bank account linked to your home loan.
It's no, it's just a loan account. The one we use is just a loan account, and we can withdraw anytime.
Okay, so this is loan account. Okay, now let me. I have a. Hang on. I have a offset account spreadsheet slide as well. So can you see the offset account explained? This one?
Yeah.
Okay, but this one is not very well structured. Okay, so what is offset account? An offset account is a bank account. Which is linked to a home loan, which is loan account. It's not a loan account. It's a bank account. You use as a normal bank account. ANZ bank account. It is linked to a loan, and so you can use it as a normal way. You can do shopping. You can do ATM. You can pay. You can put money into the account. Just normal bank account, offset account. It's not a loan. It's separate loan bank account. But how it works is this. So, do you see this loan balance? It's a brown block.
I understand what you mean, that the offset account is like a saving account, but the money go into the loan and pay off the loan.
No, money goes to offset account. Money goes to offset account. Whatever offset account balance you have will offset the loan balance. For example, if your loan is 1 million, for example, right? And if your offset account balance is 50,000, and 1 million minus 50,000 is 950,000. So the bank charge, you pay interest over 950,000, not 1 million, because the 50,000 is offsets the balance of loan balance of 1 million. So
we can put money in the offset account anytime, right?
Yes, you can put all the money into offset account, rental, in salary, all the money to offset account stay the money into offset account. You don't need to put the money into the loan because offset account serves the same purpose, of saving interest. Because if you put money into the loan, you pay less interest, right?
Yeah.
But if you put money into offset account, also you still pay less interest because the loan is offset.
But the only benefit of the offset account is you can use it as like a daily transaction.
Daily transaction account, yeah. You can.
Basically, all your wages go in there, Faye.
That's just like the bank account we have now.
It's up there. You put all your wages in there, and then you only the longer you keep your wage in there, the less interest you're paying on the loan.
Exactly, John, 100%.
Yeah. But we already have an offset account with Bankwest.
But we're not. But when the money goes in the Bankwest account, because we don't have a home loan attached to it, any money that's sitting in that account is not offsetting our home loan.
No, that's why I have to move all the money in the loan every.
Yeah. Now with this facility, you don't need to move money anymore. You just put all the salary rental into offset account. That automatically offsets the loan.
Yep,
but you have to pay for it. This offset account is not free. It's like $10 a month, right?
No. So everything is covered by package. $395 a year covers the whole package.
$1 though.
Right.
Yeah. So that's all the banks do. And offer.
And this is tax deductible as well.
Yeah, tax deductible. Yes. 100% worth. It's 100% worthwhile. Yeah. Okay. So that is this. Now let's go back to fixed rate offset account. So basically, if a fixed rate with offset account, basically used as like a variable rate, because you can pay off the loan as quickly as you want. Yeah.
That's what we need.
Yeah. All right. So that's the loan we want to. I will recommend. What I do, I will go back to work on this loan amount and also all the valuation. And I will give you a proper loan proposal for how much, what's the loan product, how much it will be. Then I will have a discussion again.
Well, basically, that's what we obviously, as you know, we only speak to you because we're keen to get the loan. Basically, as soon as we get the green light, we can start putting an offer, because we have had a couple of houses we've had our eye on. So like every customer that you have, we want to move forward on this as quickly as we can. But
just be careful at the moment. As I said, as you know, that there's so many people want to buy properties.
I understand.
The banks are slow.
I understand.
So I still recommend you wait for, especially ANZ, especially for investment loan. They are overwhelmed by the number of applications at the moment.
So what's the turnaround? Basically, once you put the application in to being able to buy the house, what are we looking at? 6 weeks?
No, not that long. To get a loan approval, we're talking about 20 to 30 days.
Oh, that's good.
Okay.
But for settlement, still six weeks settlement. However, you want to wait for pre-approval first.
Yes. Okay. So pre-approval, you're telling me 20 days. So we're looking at 3 weeks. Yeah,
3 weeks to get a pre-approval after we put application in the system.
Okay.
So I will do as quickly as I can to put application together.
Sounds good, Dennis.
One more question. Dennis, what's the benefit that add me in as a lender? Is because I got the rent income, would that help?
Sorry? Are you as a borrower?
Yeah.
Yes, because the property will be owned by you as well.
Yeah.
So you have to be in the loan.
Okay.
Yeah.
So the rent income will be also used as
your income will be considered as well. Will be used as well.
$170 a week.
Yeah. So you are 170. Yeah.
All good. Excellent.
All good.
Okay,
Okay.
thanks, Dennis. I'll let you start with the application.
Yeah, okay. Now, email me something. I have your payslip rental statement, and also email me your driver's license as well. So I need your full name as well as a date of birth. And when I open my form, I open my file, and I'll email us also a bank statement as well for for salary. Yeah, that's no problem. But CFA is very good preparing documents.
Yeah, if you can do you have a checklist? A checklist. I got the driver license here, passport, and what others?
Driver license and passport. That's all.
Oh, you just need this.
Yeah, for time being. Yeah, but I'll email later on. I also need a loan statement and bank account statement as well.
Yep, that's fine.
Oh, so I can. What other bank statements?
The bank statement, the main bank statement the bank will that we need is the statement John uses to put the salary deposits.
Oh, the salary.
Yeah,
that one we use for
the Bank West, right?
Yeah, Bank West.
For the daily transaction. So it's like it's including all our like in and out.
Yeah, that's fine. Yeah, that's
including
fine.
everything. How many months?
3 months.
3 months.
3 months. Yeah.
All right.
Yeah.
Yeah, no problem. I'll get this just 3 things easy. Yeah, just the ID and long statement and the
bank statement.
Yeah, easy. Yeah, I don't need a checklist now. I can just email.
Okay.
It's easy.
Good.
Thank you.
Any questions, John?
Thanks, Dennis. All very clear. Thank you.
Okay,
If
fantastic.
I have a question, I'll send a message to you. So far,
call me, text, whatever.
Yeah, text is better because you need your personal time as well.
Yes. Yeah.
So yeah, thank you so much.
All right, no problem. You're welcome.
A great meeting.
Thank you.
Bye. See you. Bye. No problem.
Bye.
See you. Bye. Bye.
Bye.
Bye.
It's much clearer.
Yes,
Straightforward.
This is why I was accompanying your friend.
That's basically what he needs to explain to us.
Here's the option. He did try to explain to us what the variable is. I know what the variable is, and I know the variable. But at least he takes the time to go do this, just in case someone isn't familiar with it. So he's done his job. At least that way people don't say, oh, we didn't tell us what we done. So, all good, I'm happy. But that saves us spread the weeks. As I said, mate, we got 3 weeks. It's annoying for me. Anyway, we've got Dennis now. 3 weeks.
Service, we can just go to put our offer in and just tell them that we're already got.
Hang on, babe. Hey, listen to what Dennis said. He said, don't put an offer in or wait for pre-approval.
You'll miss the house.
We'll get another house. We can touch base with the, if you want to look at it, we can still look at it. We need to space, or we don't have pre-approval. We are in the steps of getting pre-approval within 3 weeks.